Welcome back, everyone, to today's Explainer. So let's just dive right into it, shall we? We are unpacking this really fascinating, incredibly deep equity research report from Goldman Sachs that maps out the current market opportunity of the creator economy. I mean, think about it. What literally started as a niche kind of hobbyist space back in the early days of social media, it has completely evolved into this multi-billion-dollar global economic engine. Today, we're going to break down exactly how this landscape is shifting, how creators are building these massive businesses, and honestly, how tech is fundamentally rewriting the rules of digital media. Let's take a really quick look at our roadmap for this explainer. We'll be moving through 6 distinct megatrends today. Number 1, the creator economy boom. Then, how creators make money, the pivot to long form, AI changes the game, the TikTok ban impact, and finally, the platform winners. Okay, let's get into it. Section 1, the creator economy boom, or as I like to think of it, scaling a totally new asset class. Okay, we have to look at the sheer, undeniable scale of this industry, which is maturing incredibly fast. By 2025, Goldman Sachs actually projects there will be roughly 67 million individuals globally who consider themselves creators. 67 million. And get this, that number is expected to grow at a 10% compound annual rate to hit over 107 million by 2030. But here's the absolute crucial takeaway. The distribution of all these creators, it's shaped like a massive barbell. The vast majority of this huge growth is coming from part-time amateur creators. But on the other end, a tiny, tiny fraction of professional creators is capturing almost all the revenue. To put that into perspective for you, data shows that just 3% of YouTubers capture 90% of the net creator earnings on the platform. 3%. So it's this massive widening talent pool, but with highly, highly concentrated earnings right at the top. To really wrap our heads around this boom, we gotta look at the chronological journey that got us here, right? We started in phase 1, that desktop-heavy Web 1.0 era back in the 90s and 2000s. Then we shifted into phase 2, Web 2.0, which was totally defined by mobile apps and the sort of walled gardens of big social media platforms. But now we are entering phase 3, the interactive web. This era is defined by AI assistance, augmented and virtual reality, and crucially, the creator economy itself. Content discovery is basically being outsourced to AI now, and the power dynamic, it's finally starting to shift away from centralized platforms directly into the hands of decentralized creators. And because of that massive power shift, serious capital is flowing back into the space. I'm talking a staggering $1.5 billion in funding flooding into creator startups just in 2024 alone. Now, private funding actually peaked back in 2021 before taking a pretty sharp dive in 22 and 23, mostly thanks to rising interest rates and those broader macroeconomic headwinds we all felt. But last year, funding completely rebounded. It actually outpaced the funding growth for overall U.S. startups. This proves, without a doubt, that the creator economy is no longer just a fringe hobby space. It is a heavily capitalized asset class backed by real venture capital and an absolute surge in demand for engineering and creative talent. Moving on to Section 2, how creators make money, diversifying the income stream. So let's transition into the actual mechanics here. How exactly are these millions of creators building truly sustainable businesses? Well, for a long time, creators relied heavily on just one main pillar, right? The platform payout model. Things like direct revenue share or those fixed creator funds. But today, a successful creator operates a much more blended, diversified business. They're utilizing audience-based monetization, so think virtual gifting, tipping, and subscription models like Patreon or Substack. And they're leaning heavily into brand direct deals, which includes affiliate marketing and those super lucrative direct influencer sponsorships. It's the whole shebang now. And because creators have all these different ways to make money now, platforms are literally having to compete fiercely just to retain top talent. The whole era of the fixed creator fund, where platforms would just set aside $1 billion in a pot to dole out, that's ending. It just diluted payouts way too much as more and more creators joined. So instead, giants like Meta, YouTube, and TikTok are launching these really comprehensive creator programs. They're aggressively blending ad revenue sharing, paid subscriptions, and tipping features into one holistic package. Basically, if you hit their follower and engagement requirements, you unlock an entire suite of business tools. All right, Section 3, the pivot to long form. Engagement versus earnings. Now, this brings us to a really surprising shift in format preference, especially given the absolute ubiquity of short-form scrolling these days. Look, we all know short-form video, TikTok, Reels, Shorts, they drive incredible daily session counts. People are totally addicted to the scroll. But long-form content is actually experiencing a massive resurgence right now. Why? Well, it comes down to earnings and viewership habits. Creators are consistently reporting that RPMs, which is the revenue earned per 1,000 views, are significantly higher for longer, episodic videos. Plus, get this, TV has actually become the primary device for viewing YouTube in the US. Audiences want TV-like episodic formats. They want podcasts. This pivot is totally blurring the line between internet influencer and mainstream celebrity, with creators now signing these massive streaming and entertainment deals. Which leads us perfectly into Section 4, AI changes the game, the great accelerator. Let's walk through the life cycle of a modern creator leveraging AI, because it is pretty wild. Step 1 is content generation. They're using text-to-image or scripting tools to rapidly prototype and ideate new concepts. It's like having an instant brainstorming partner on demand. Step 2 is scaling globally. They're using AI-powered voice tech to auto-dub their content into multiple languages in real time, or even deploying an AI avatar to engage with their fans 24/7. But step 3 is perhaps the most fascinating part of all this: passive data licensing. Think about it. Creators film hours and hours of unused B-roll. Well, now tech giants are offering significant payouts to license this unpublished video content just to train their AI models. According to Bloomberg, intermediaries have already distributed over $5 million in licensing fees directly to creators for their raw footage. That is literal passive income straight from the cutting room floor. And to keep creators locked into their ecosystems, legacy platforms are deploying an absolute arsenal of new AI weapons. YouTube is offering Dream Screen for AI-generated backgrounds and auto-dubbing. Meta is rolling out AI agents and text overlay tools. TikTok has Symphony for AI marketing content. Snap and Pinterest are integrating AI into lens creation and background generation. The bottom line here? The platform that provides the best, most seamless AI enablement tools is ultimately going to attract the best creators. Simple as that. Moving to Section 5, the TikTok ban impact, a geopolitical disruption. So we definitely have to address the regulatory elephant in the room, the situation surrounding TikTok in the US. Back in April 2024, the US Congress passed an act requiring TikTok's divestment. Fast forward to January 19, 2025, and the app actually went dark in the US, before a new executive order on January 20th delayed the ban for 75 days. Now, we are absolutely not taking a view on the ultimate political outcome here, but presenting this purely as an analytical trigger event, we have to ask a critical market question. If a full shutdown really does materialize, where exactly does that massive pool of user attention and influencer ad spend actually go? Well, according to Goldman Sachs research, the primary beneficiaries of this vacuum would absolutely be Meta and Alphabet. Instagram Reels and YouTube Shorts are already massive short-form players, and during that brief period TikTok went dark in January, US daily active users on Meta and Google properties remained highly stable, while alternative apps saw pretty low retention. Because Meta and Alphabet already command the vast majority of US influencer marketing spend outside of TikTok, they are perfectly positioned to capture those reallocated ad budgets. Snap Spotlight and Pinterest Ideas features would also likely see some modest share gains, but the lion's share goes to the big two. Section 6. The platform winners. Building the flywheel. Let's bring this all home by identifying exactly what separates the ultimate winners from the losers in this space. Platforms basically have to master these 6 specific characteristics to create a self-sustaining flywheel effect. First, you need a massive scale of audience. Second, you need deep pockets, access to large pools of capital to fund those new creator programs we talked about. Third, you must have state-of-the-art AI recommendation algorithms to serve the absolute right video to the right user. Fourth, effective and diverse monetization tools. Fifth, robust data and analytics for brands. And finally, number 6, integrated social commerce or shopping elements. If a platform nails these 6 things, it creates a loop that endlessly attracts both users to watch and creators to build. And that leads us to the final scorecard. Based on those 6 flywheel traits, Goldman Sachs has actually rated several legacy tech giants as buys, specifically due to their positive exposure to the creator economy. We're looking at Alphabet, Amazon, Meta, Spotify, and Webtoon. They all check these boxes. They have the billions in capital. They have the massive logged-in user bases for first-party data, meaning they have direct owned info about their users. And they have the aggressive AI integrations required to keep creators loyal and advertisers spending. They aren't just participating in the creator economy anymore. They are literally building the underlying infrastructure for it. Which leaves us with this final, somewhat provocative thought. The creator economy has transformed from a decentralized hobby into a 67 million person industry fueled by AI and billions in venture capital.
But as these top creators scale their businesses, as they launch their own product lines, and totally blur the line between internet influencer and mainstream Hollywood celebrity, who really holds the leverage here? Will the tech platforms continue to control the creators through algorithms and payouts? Or will the creators, now armed with AI, syndicated content, and massive, wildly loyal audiences, ultimately control the platforms? It's something to think about. Thank you so much for joining me for this